excited. So I'm Alaina, co-founder of Options Bay. In our platform, we basically started to teach women about the stock market, but then the men wanted to be included. So now we just teach everybody. But today I really wanted to kind of dig into technical analysis. I've noticed it's something a lot of people struggle with, and I really enjoy it, and I think it makes trading a lot easier. So I would love to dive in. So this is TradingView. This is the platform that I use when I trade. Well, not trade, but use when I chart. And so on the home screen here, there's a lot of different tools that are available on this platform. But the main thing I use it for is the charting. So you'll just click chart. And I'm just going to go over some indicators that you guys can use to kind of help you navigate the market and kind of indicate the price direction so we can make the best trades possible. Let's see. Let me clear some of this off for you. All right, so this is going to be Boeing Airlines. If you guys are familiar, they've had a lot of issues this year with their 737s, but it's actually one of my favorite stocks to trade. And so the first thing you'll notice here, and let me just, I guess, go over a little bit of setup on here. Up here in the top left, you can put in your ticker symbol for whatever stock you're looking at. Here are your time frames. And so you can go down to all the different time intervals that you're using down at the bottom, and that's going to apply to your candlesticks. And we'll get into that in a second. Across the bottom, here's your time frame. So you can see, you know, trends of different time periods, and that's super important when you're trading. You always want to get the best picture of what direction your price is headed over that period of time. Over here, you have all your drawing tools, which we'll get into some of these. Up here's your candlesticks. There's all different kinds of candlesticks here. I prefer the Heikinashis or just the regular candles, but as you get more versed in charting, you'll want to switch this around a little. And then your indicators. So this is the bread and butter here. So these are my favorite indicators that I use, and I'm going to go over some of these with you guys. But I like the MACD and the RSI, the relative strength index. I'll go over those with you, and then I'll add on a little more so you can get the full picture of the price move on Boeing. So the first thing I'm going to do is go to my 6-month chart just to get an idea for where we're headed and where we've been. You see Boeing back in December, I hit a high around 240, 242, and then we downtrended for a while. And so one thing I like to do to kind of confirm the downtrend is I like to look at my moving averages. And so I've got a 50-day on here right now, and I'm going to go ahead and add a 200-day and show you guys something really cool with those. Let's see. So if you just tap that little setting bar beside the indicator, it'll actually let you customize these. So with Boeing, if you see here, this 50-day moving average crossed down below the 200-day moving average. This cross right here is called the death cross, or the cross of death. And that actually signifies a strong downtrend. And then if we move our time frames around, we can actually see that cross occurred a little sooner than on the 6-month chart. So it actually happened in late December, but we did continue to trend down after that cross. On the flip side, this 50-day crossed up above the 200-day, and this is signaling an uptrend. So this right here would signal our reversal. So we actually started to trend up after that. So that's the 50-day moving average and then the 200-day moving average. Those are super cool to look at long-term trends. All right, I'm going to clear that off. All right, so the next thing I'm going to go over with you guys is the Fibonacci retracement. The fib is really, really interesting. I think a lot of people kind of get overwhelmed with it because it looks a little scary, but I will explain it for you guys. So how you find this, you look at this little pitchfork type thing, then you go down, and then here's our fib retracement. And so how I've been kind of tracking Boeing, you're going to go from your, oh, sorry, let's see. Sorry about that. All right, so you're going to plot from the top candle wick of your peak that you're looking at, and you're going to go to the bottom candlestick of the lowest point. And so if you see here, you know, we had our downtrend. One cool thing that you can do with charting is candlestick patterns. And so if you're familiar with candlestick patterns, you know that when you're reading these, they can give you a lot of information about where the price is headed. And so up here, this M, this is called a double top, and that's actually going to signal a downtrend. So anytime you see the candles forming this pattern, that is a bearish reversal pattern. So you can go ahead and you can, prepare to run puts, or you can average down once the cost comes down. You can add on to your position at a discount, but that just tells us that we're headed down. There's a lot of ways to leverage that. On the flip side, after earnings, Boeing actually formed a double bottom. And so this candlestick pattern is a bullish reversal. So that means we're actually headed up. And then as you can see, Boeing did start to trend up, which is super cool that the candlesticks could tell us that. All right, so one other thing I like to add to my fib is going to be the volume, the fixed range volume profile. And so this, and one other cool thing about TradingView, you can actually star your favorites so you don't have to dig around all the time, but the fixed range volume profile. And so same thing, you're going to chart it, same place as you charted your fib. All right, so this is going to tell us where the volume is in our price action. So this is telling us where people are holding their positions, where they made their buys. And so this red line here, this is your institutional and your bank buying. So that's super important to know where they're sitting. So if we look at all this together, Boeing, we hit a reversal, we headed back up. And let me get into the fib, like what these numbers actually mean. So basically the Fibonacci retracement is going to tell us that whatever the price does, at some point, it's going to retrace back towards this 0.5 level. And so you see BA, we came down, we actually broke that level, we came down, but then we eventually retraced back to it. So putting this all together, synthesizing this, if you wanted to do a long-term position on Boeing, you could see this double bottom form. If you wanted to go, if you're bullish on it, you could have entered a position down here because we know the fib tells us that Boeing wants to come back here. So if it's a true uptrend, we'll actually continue to reclaim these levels and we'll get back to our previous highs. So as you can see, Boeing, we hit the double bottom, we reclaimed this, the 0.382 level. We dipped a little, we bounced back, and it really fought hard to get to this 0.5 level. A lot of people, including myself, we heard the news that they had another engine failure. We thought the stock was going to drop. But let's zoom in a little here. So the stock actually broke out after that engine trouble. The stock actually broke out and it reclaimed some more levels. So we broke out again, pulled back, and then we retested this level. So this is the 0.618. Anytime you see a breakout like this, where you're jumping over multiple levels, typically you're going to see a pullback because we know stocks don't go straight up in the air. So what happened is we broke out and then we actually retraced all the way back down to this original level. But you can see again, it's fighting and consolidating up here for hopefully another potential breakout. We'll see what happens. All right, so that being said, I do want to get into some indicators. Are we taking questions on here? I'm sorry.
Yeah, if you, well, no one's posted anything yet, but yeah, if anyone has any questions, they can post them in the chat. And you should be able to see the chat. If you move your cursor either to the top center or the bottom center, where the Zoom menu comes up, there will be a More button and a chat.
Okay, perfect. Thank you.
Mm-hmm.
All right, so, and then I guess one other thing I should say, if you are going long-term in these positions, a lot of times you'll see people take profit at these levels. So you can actually use these as your levels to take profit. Because typically once we reclaim a level, we will pull back a little before we reclaim another. So you can absolutely, take profit and re-enter at these levels as well. And let me jump down into the indicators. I'll clear this off. All right, so when you're trading, it's really important to know your goal, like, when is your planned exit or how long are you planning to be in the position? Not only because we're working against time decay with stock options, but just because we want to know our time frames, like on our chart. So if you're going out on a long-term position, you definitely want to look at a longer time frame just to get the idea of the trend. But if you're day trading, obviously you want to look at a daily or maybe a 5-day. Definitely swing trades, you want to be on a 5-day. The swing trading is when you're buying a position and at least holding it overnight, but that can be extended. But you definitely just want to make sure that your trends are matching your goals for that trade. So you're looking at the right data. All right, so the first thing I'm going to go over with you guys is the MACD. And I'll zoom in a little here. So MACD, it's moving average convergence divergence. Basically, it's a momentum indicator. It lets us know how strong the trend is that we're working with. And so a couple things you'll notice with MACD, you'll see this, the red here, like the dark red, that is your strong selling. And then these thinner lines that represents your reversal. And so same with the dark green, that's your strong buying. And then the thinner lines, that's your sellers coming in, that's that reversal. And so with these two lines down here, this red line is called the signal line. This blue line is actually what we want to watch. And so let's say we want to buy a call and we're bullish, we think the price is going to increase. So anytime you see this blue line crossing an upward trend over that line, that's actually a call, that's a buy signal. So you can buy in, you can ride this momentum up, and you can sell up here. When the MACD line crosses the signal, then we're at a sell. So that's a sell signal for a call. Or if you want to run a put, you can actually buy a put right here and you can run this back down and profit that way. Another cool thing with MACD to really kind of pay attention to is the space between these lines. So the more space between the two lines, the stronger the trend. If you see these lines kind of hugging each other, like, let's see, really right in here, the price is kind of moving sideways. So you're really not getting a ton of movement. But yeah, so that's one thing I like to use for my buy and sell signals is that MACD. Let's see if I can find an example where it's really moving sideways. So like here, the lines are just kind of hugging, not really a lot of action. So that's a really, that's not a buy signal or sell signal. It's just a hang on and see which side's going to win, the buyers or the sellers. And then the periods on this, 12, 26, 9, I don't really change those. They're defaulted. But again, just to show you how to operate this, let's go to indicators, and you would just put in MACD, and there's your indicator. So the next one I really like is RSI. RSI is going to tell us whether a stock is overbought or oversold. And so there's two ranges for RSI that you really want to learn, and that's the 30 and the 70. And so if your RSI is below 30, like right here, we were at 26, that is a buy signal. And that signals, that tells us that the stock is oversold. So once your RSI taps below 30, that's when you want to go in for your buys. The flip side of that is if the RSI is over 70, that tells us that the stock is overbought, and that signals a pullback. So if you look at this RSI, let's say we got in here at the 26 and we just wrote it up to where it was 83, you absolutely could have made a profit in this little movement here. But if you're doing long-term trades, like let's say you want to swing trade. We'll go back to the 5-day. Oh, I'm on a 5-day. Okay, so you could have got in here at this dip, or you could have got in here at this dip, and you could have actually ridden it up. You would have had to, stomach some of these ups and downs, but you could have ridden it up back to where it was overbought again, and you could have exited. So like this would be a good swing trade. This was February 23rd, our RSI was 25. And then on the 24th, the next day, our RSI was 91. So that's a swing trade right there. That's overnight price action. And that would have been a beautiful swing trade because it popped right there. A lot of times, and when I first started trading, I really got into what they call ride the RSI. So I would literally just wait for the RSI to get below 30, and then I would sit and wait until it got above 70. And I had really good success with that. On the flip side, if you want to be a bear and play the downside, you could absolutely, buy your puts when the RSI is overbought and ride it down to that oversold. And again, up here, this would have been a beautiful put if you rode that all the way down. So that is RSI. And so let's see, some other indicators that I really like. Let me pull up the Stochastic RSI. All right, so Stochastic RSI, it looks crazy. I know it looks crazy, but it's really good for sideways price movement. Sometimes, like here, for example, you see the MACD is moving sideways, the price is moving sideways, but look at the Stochastic. It's still giving us the action of the buying and selling. And so depending on your platform, the ranges for this RSI would be 20 or below is your oversold, and then 80 or above is your overbought. And so I don't really get into like trading the sideways action, but once you get more advanced and start running like spreads and like iron condors and all that stuff, then this might be something you want to implement. But just for if I am in a position that's moving sideways, I do kind of like to check this out and see those little micro movements. It's pretty cool to know that. Another indicator that I really, really like, let's see, is the average true range. And I don't think I have it on here. Let me pull it up. Hope I didn't have it favorited. Okay, so average true range is pretty cool. Or ATR, you can abbreviate that. And I will pull up my daily candlesticks. So this is going to show me one candlestick for every day. Let's see. Let's do the 6 month. All right, so sorry, this is showing me something weird. Okay, I don't know why it's showing me something like this, but let me show you this real quick. I'll just go to FinViz. Basically, the average true range, it tells you the average that the stock moves in a day, like the average points that your stock moves in a day. And so options trading is directional. So we make money if the stock goes up or down. Again, you can make money on the sideways movement, but when you're first starting out, you definitely want to have that directional movement. And so I'm just going to pull up Boeing again. Let's see. All right, so the average true range or ATR on Boeing right now is 860. So that's basically telling us, and here's this, and I guess I should explain FinViz. So FinViz is actually a stock screener. You can go on here and find all kinds of cool stuff about different companies. It really tells you everything you want to know, but I come here to get the ATR too. But basically this is saying that on average, Boeing moves about 8 points a day in either direction. So when you're trading options, that's really important to know. You really don't want to buy a stock option with an average true range of below 1, because if you can't even get 1 point a day, then it's really hard to kind of profit on those short term. Maybe long term if you're patient, but you want to have something that actually moves. So I like to come here and get that. I don't know why it looks weird on TradingView today. All right, so okay, so I'll add pivot points. These are pretty cool. So pivot points, I actually just learned these a couple nights ago, but they actually tell you when the price is going to change directions. And so let me do like 1 hour. All right, so the pivot points, they tell you, these are really buy and sells as well, but they tell you when to pivot. So these bottoms, those are your supports. So that's telling you, that's pretty much a buy signal. And then the top here, those are your resistance levels, and those are your sells. And so if you look at your pivot points, they really tell you when to kind of leverage. You don't really want to get into like up and all the ups and downs because you're going to be over trading. But it is pretty cool to see these, the price action like this. I think it's really cool, especially when you're first starting out. It kind of helps you understand where price is going and where it's been. Let's see. And I think I should go over support and resistance levels. I feel like I kind of skimmed over that. All right, so support and resistance are pretty much, it's like the floor and the ceiling. And so if you are looking at a stock, you're going to notice it's going to hit the ground and it's going to bounce, and then it's going to hit the ceiling and it's going to reject and come back down. And so I'm actually going to pull up Apple because they have, and really SPY, well, all stocks have good support and resistance, but Apple is pretty cut and dry. I'm going to go to the 6 month on Apple. All right, so if you're just glancing at this, right, we don't even need the indicators. We can quickly glance at this and see these levels on Apple. And so, we have the support level. Let's see, my pen. Okay, so we have support level here. We've got support here, we've got support here, we've got support here. And this is not technical. This is literally just finding these floors, these levels of support. And so if your stock is actually truly in an uptrend, then your support levels are going to move up along the way. On the flip side, you have this resistance here. Resistance is your ceiling. And so at this point up here, Apple had hit like a new high for the time being, and there was a ceiling. And so Apple pulled back, and where it came back to, it formed a new support level. And so you can kind of look at this and say, well, Apple didn't fall, all the way back here. It stopped itself here. So that tells me that we're still going to head back up at some point. Now, if it were to break here, then I would watch here. I'd watch for it to fall back here, and then I'd watch for it to fall back here. And that's a downtrend because our support levels are moving down. So even if you are not comfortable with Fibonacci, if you're not comfortable with all the retracement and the percentages, you can definitely still eyeball this and kind of see where your price action is. And then again, Apple formed this price channel here for like 2 weeks. It consolidated. It had resistance here. I think this is like 131, around 127. If you wanted to trade Apple during this time, obviously you don't want to have a strike price that's way out of the money around 140 because that's, we have the ceiling right here. If you wanted to get at this support level, the 127, you could have had a strike, 127, 28, 29, 30, 31, what have you. But you could have gotten at this level here and caught and rode back up and took profit. Now, if you wanted to go long term, you could have got in at 127. We know that support, we retested it almost 4 times here. And then you would have been here for this breakout. So that's another cool thing about this. But it's really important to know these levels because they will help you make better trades as far as your strike prices. They'll help you see when you're too far out of the money. One thing I like to do when I'm looking at contracts is I look at the Greeks. So the Greeks are super, super important. But to keep me from going too far out of the money, I like to not buy a call or a put. I don't like to buy contracts if my Greek or if my delta is less than 0.3. And so the delta basically tells you the dollar amount. So like for every dollar that your share goes up, it's going to tell you what's going to get added to your premium. And so a delta of 0.3 is going to give you a $30 profit on your premium. So and I guess I can kind of quickly go over the Greeks too, because I know a lot of people aren't familiar with them, but delta, that's your dollar amount. Theta is your time decay. And so theta is super important as well. For every day that you're holding a contract, you're pretty much looking at, I like to call it rent. You're paying a little bit of rent every day that you're holding this thing up until the expiration date. And so to kind of curb that, I plan my trades, like I pretty much plan my exits halfway through my contract. So let's say I go out 6 months, then I'm going to try to get out in 3. I want to take profit in 3 months. The exception to that is when if you find yourself like deep in the money, like way below the strike price, or sorry, your strike price is way below that share price, you'll see that your delta will actually max out. So you can max out your delta at a 0.99. And so when that happens, you're going to see increased volatility, which we know high volatility inflates our premiums, and you're going to see a lower time decay. And so if you've actually maxed out your delta, you can actually ride out your positions a lot longer than if you're working against time decay, because at this point, you're pretty solid. This is like the goal here to get to in your trades. So outside of delta and theta, the next one would be vega. So vega, V for volatility. Volatility affects your premiums. High volatility is going to inflate your premium like a balloon. If you buy a premium that has high volatility and that price drops or the volume moves away from the stock, that volatility is going to deflate like a balloon and it's going to take your premium with it. And that is called the IV crush. A lot of times you'll see that, I'm sure people saw it on GameStop. Last time GameStop rallied with Wall Street bets and everything, if you would have looked at that options chain, the calls and the puts were all negative because the volatility was around 800%. So it was insane. So that absolutely can affect your premium. You'll see it a lot with earnings reports. You'll pay super high premiums to get in earnings reports. And then after the report, the volatility deflates and the premiums are crushed as well. So that's definitely something to look out for. And then just to explain volatility, that's just measuring how wildly like the stock swings. And so yeah, so how volatility, it can work for you. It can absolutely work for you when you're trading. Like Tesla and Amazon, super volatile. Premiums are super expensive, but those things can swing and we can profit off that. So it's not the worst thing in the world, volatility. Um, the next thing would be gamma. So the cool thing about gamma, gamma tells us the rate of change of our delta. And so if your gamma goes up, your delta is going to change quicker. But one cool thing I like about gamma is that it increases with time decay. And so one day I actually wanted to kind of test this out and see if I could like profit just off the Greeks. Like, okay, let me just back up. So anyway, I bought a Tesla call. I paid about $110 for it. I bought it on Thursday and I swung it into Friday, which was extremely risky, which was only $100. So that was like my risk management, but I just wanted to see how Gamma worked. And so I bought it Thursday, expired Friday, swung it overnight. Tesla ran overnight. I think I was about $60 out of the money. But the next morning, there was like, I think it was $1,200 that I made off that play, just off the Greeks and the one day to expire, and the gamma and the theta, and then the delta went crazy. So that was pretty cool. If you ever decide to swing like a one day to expire, you don't want to put a lot of capital into it at all. Something that you don't mind losing. But it's pretty cool to see how the Greeks can all come together like that. So that's one cool play that I had. And then the last one is row. Row deals with the federal interest rates. Those do have an effect on your options premiums. The rates don't change very often, and they only really affect certain sectors. But row, you'll see it when you're looking at the options Greeks, and just keep in mind that does deal with the interest rates. Let me see if there's anything else that I haven't touched on indicator wise. Um, I don't know. I think, well, I guess I can go over volume too. So volume is super important. You really want to trade things that are high volume. When you're looking at options, there's something called like a bid ask spread, and you'll also see volume, you'll see open interest. But the goal is the liquidity. So like liquidity tells us how easily we can get in and out of a trade. So if something isn't heavily traded, then you might have a hard time getting in, and you will have an even harder time getting out. So um, the bid ask, let's see. Well, let me just do the chart stuff. So on here, you'll see these volume spikes. These are strong buying, and they actually correlate with these, the price jumps too. So anytime you see a volume spike like this, you're going to see some huge, massive green candles. On the same side, you'll see it with the selling. So here's some strong selling correlating with the drops. So these volume spikes are super cool to kind of see on your charts. And you can see them on the dailies, you can see them on any time frame. But I do want to get in on the bid ask spread because it's really important. When you're trading stocks, or investing, there's only two things you can even do in the market, and that's buy and sell. And so when you're entering a position, the bid, that's what the buyers are willing to pay for this thing, and then the ask is what the sellers are asking for it. And so you really want the spread to be close together. I've seen spreads before. Basically, let's say you're buying a contract and it's at 30 cents. So you're paying $30 for this contract for your bid. The ask on the flip side, let's say the ask is $1.20. So like as a seller, you don't want to come in, or you don't want to, drop down your price all the way to $30 if you're asking this much for it. So anytime you're entering a trade, just make sure that your bid and your ask are close together. That way you'll be able to easily get in and out with the majority of your profits. And so with high volume, you'll see the spreads will typically be closer together. Another thing I would say is open interest. That's going to tell you how many active contracts there are in that position. So you want to make sure that you're not the only person there. I've seen open interest on contracts be zero, and that means no one's holding it. So that's a red flag. Another thing would just be the volume, like how much of this contract is being traded a day. You want to make sure that there's people that are actually in and out. And again, that all goes back to your liquidity. You want to make sure that you're not trading something alone. You don't want to be the only person there. Um, I think that might be everything. It's kind of short. Does anyone have any questions? Okay, so yeah, sorry guys, I did not see these. Okay, so I've never actually run the PPO before, so I'm not familiar with that, but I would love to look into it for sure. The RSI, okay, I can show you RSI. Let me go to a 5-day. All right, so what stock is this? Apple. Okay, so let's look at Apple. And let me add the RSI so you can actually see it. Let's see. All right, and hang on, I'll lighten this up for you guys. It's kind of dark. All right, so with the RSI, let's see, down here is your buy, so it's below 30. Or you could have gotten in here, really any of these where it's below. This is actually current. So with your RSI, you get in below 30, and this is going to correlate with your MACD. So if you look at the straight line up, you see the RSI dips, you see the MACD crosses, and you see the price increases all in succession with one another. So you can leverage this. Sometimes on certain stocks, you'll see the opposite happen. So like on Tesla, like if Tesla's ripping, you might see the RSI at like 80 or 90, which is telling you to sell, but the stock is still going up. And you'll see the MACD going up too. So in that situation, I like to kind of watch it. So like I won't jump into a position when the RSI is up here, like as a bull. But if you're watching this, you can definitely see, like you see how it's high and then it kind of pulls back and it goes up again during the breakout. Just know that what goes up has to come down. So RSI is not going to hang out up here for long. It may be up there and bounce around, but it's going to come back down. But yeah, so you want to definitely use these all together. Again, here's another one. The RSI dipped to below 30. We see our reversal pattern here in the MACD, and then we see our bounce. And you can do this on any time frame, like any time frame, it's all the same. So let's see for the month, right? Let's say you want to make a monthly play on Apple. So you could have got in here on the 23rd, and you could have rode this RSI. You would have had to stomach these dips, but you could have got out here and taken profit, or you could ride it out because I think we're headed back up. Let's see. Options-oriented indicators are available. I've actually never used the IV percentage. I look at it on my brokerage. I've never charted volatility before. And then the delta, so yeah, the delta 0.3. I do like to look for the contracts that have a delta of 0.3 or higher, and that just protects me from the time decay. Let me see if I can pull up. I know everyone hates Robinhood, but it's really easy to look at. So don't mind the brokerage. Just let's look at the Greeks. And then the brokerage, let's see. All right, so I'm going to pull up the Apple options chain for you guys, just so we can look at the Greeks. All right, so this is in the money, right? Our strike prices below the share price in a call are in the money. You see the premiums get higher as we go deeper in the money. And so here, this delta is 0.52. So that's $52 for every dollar that Apple goes up. That's going to get added to our premium. So if we go up, let's say we want to play out of the money, which this is a weekly, so I would heat against that. But you see this delta is $8. This theta is 10. So in this contract, you're so far out of the money that you're actually losing money on time faster than it's coming back to you on delta. So if you've ever heard anyone, or if you yourself have ever been like, my stock is recovering, but my contract isn't moving, it's probably because your time decay. Um, so just make sure that point 0.3 rule, let's see the 129. So this is out of the money. It's a 0.24. That's still too low for me. And then here you've got the 0.32. So the 128 strike, you would still see a nice profit. The one thing I will say, like this is a 0.24. If I were to go this far out of the money, I would probably buy multiple contracts because you're going to have, a 0.24 on multiple contracts. So you still would see a profit. But again, look how tight that is compared to your theta. It's still cutting it pretty close. So I just like to get ahead of the time decay when I'm trading for sure. Um, do I trade earning announcements? What is your favorite earnings play? I used to trade earnings announcements a lot, full transparency. When I started trading back in March of last year, I came in at the recovery of the COVID crash. So I literally was throwing money at the market and making it back, and it was beautiful. However, that's not real life. And earnings is extremely dangerous. It's gambling. And so anytime you ride a play out through earnings that's short term, um, you really are pushing it. Like you're definitely gambling. Now, if you are holding long-term positions, obviously earnings are inevitable, but I would not recommend writing things out through earnings. The one, I guess, caveat to that is if you do play earnings, you just want to protect yourself. So you want to hedge, run spreads, just be safe about it. You don't want to just throw money at it and not have any type of protection on your position. So I've written them out with like debit spreads, things like that, but I'm not going to just buy calls or puts and ride out through earnings anymore because I've lost enough money to kind of learn from that. Um, but my favorite earnings play of all time that I don't know that we'll ever see again in our lifetime is probably Zoom last year. Zoom went insane, but that was a unicorn. And I feel like a lot of people lost money trying to chase that same high they got off that Zoom earnings play. So just be careful with those. Definitely be careful with those. So brokerages, I do use Robinhood for like day trading and swing trading. I have Power E Trade that I absolutely love. Um, I have a TD Ameritrade account that I don't actually trade on, but I do use that for paper trading and back testing. And then I also have Webull. So I've got 4 brokerages. I think for anyone trading, it's important to have more than one brokerage because that gives you leverage. There's a pattern day trading rule. Like you can't trade more than, you can't do 4 day trades in 5 trading days if you've got less than 25K in your account. And so if you have multiple brokerages and you see, something you want to jump in on, then you're not, kind of held back by that rule, which is pretty cool. And then another thing I like about spreading out my portfolios is that it's the mental thing. So like my long-term holdings, I'm not looking at them every single day. They're in one account. They sit there. I might go in and add, but I'm not, constantly seeing it. Like on Robinhood, for example, I clear this account off every week. This is like my fun account. I play on here, make money, and then I transfer it out into my long terms. So I hope that answered your questions. Asking about the volatility. Obviously, you can see it here, but you can also see it on bar chart. If you go to bar chart, you can look up your stocks and it'll actually give you the volatility on those positions as well. Do I trade spreads? What is your favorite spread? So my favorite spread is the bull call spread. It's you buy, basically you're going to buy one contract. Actually, I can show you here. Oh, I got off of it. Let me go back. I like the bull call spreads because they're basically you're going to buy a call in the money, you're going to sell a call out of the money, and then you're going to profit as the stock goes up. It's a bullish spread. Let's see. Okay, so bull call spread. So yeah, you would buy one call in the money. and then you're going to switch to sell. I don't even like the word sell. I like write, because sell confuses a lot of people, but you're going to write a leg out of the money. So this is a really small one, but this is $53 entry. This does have a max profit. So these aren't going to be as profitable as just buying a straight out long call. However, it's $53. So you could add more than one, and you can compound that. So another thing with these legs, the longer you spread them out on here, the higher you can potentially profit. So if you wanted to go, further up, then you're going to pay a little more, but your potential profit is going to be higher on that spread. But that is my favorite spread. And basically what this does, when you buy a call, you have the right to control 100 shares of a stock. And then when you write or sell a call, then you have the right to sell 100 shares of a stock. And so typically when you write a call, you have to have 100 shares. It's collateral. You have to have it to back that up. But when you buy and sell together, then the call that you buy, it serves as your collateral for the call that you sell. So you can kind of bypass that rule, but you want the price to increase and you'll profit as that goes up. And there is a site, options profit calculator. Let's see. And the cool thing with this, with spreads, is the volatility and the time decay. So you're selling premium. So you're actually, you're not so pressed on time decay. You're actually benefiting from time decay. So that's different, right? When you're buying calls, time decay can be killer. So let's see, we're gonna do a call spread, and I'll do this really quick and I'll wrap up. I know I'm running out of time here. So Apple, get price, and this is options profit calculator, totally free. I use it every day. Yep, options profit calculator is free. So I'm just going to do a quick debit spread and show you how you would profit. And you can actually use this for just calls and puts too. You can use it for any type of strategy, like all up here. You can customize it. It's all free. So we're going to buy a call in the money, and then we are going to write or sell. We're going to sell out of the money. So let's go to one. Let's see, we'll do one. Okay, so we're buying a 127, we're selling a 131. Our debit is $97, calculate. Okay, so this is the weekly spread. Up here, here's your prices that the stock would go to or could go to. Here's your dates, of course, and then here's your percentage change. So as you can see, your time decay is not working against you here. So it's pretty cool. But you do have a max profit again. You can't, they can't go to the moon, but you can definitely add them up. And as Apple goes up, then you can definitely make money off of that debit for sure. And then I think that's everything. Do you guys have any other questions? If you guys have any questions that I didn't answer, because I kind of rambled, sorry, I have had a lot of caffeine. But we are on Instagram at Options Bay. It's just Options BAE. And me and my partner Chaz, we answer questions pretty quick. So if I didn't cover something, please feel free to reach out. I'm happy to answer any questions. We don't have a newsletter. That's a really good idea. No, we have really our main source of information right now is Instagram. We have like a website and we have a Slack group, like a Slack community. But yeah, I'll go to it. Let's see. Yeah, for sure. Okay. Oh, I think I sent it out the wrong way. Sorry, guys. Thank you, David. All right. Yeah, if you guys need anything, reach out. This was really fun. Thank you so much for having me.